you have taken to Twitter. I think, you were a little bit late, but you've gotten really good at it really fast. And I can go back to right at the beginning of when this was happening and sort of see all your comments. And just to throw a compliment your way, they're always very measured and productive and really not a waste of time for what you've gone through. I want to start by asking you, as a risk manager, one of the best, and I really believe that, do you think the way we're approaching reopening the country, do you think that this is a feasible way to do it in terms of both risk, trying to minimize risk, but also trying to get the economy open again?
I think we're experimenting here. The states, from the beginning of the Federalist period, the states were always had. Obviously, we have a federal structure. States make their own rules. And when it was first talked about it, the states were supposed to be kind of laboratories. So states can do different things. And then, of course, the outcomes would be noted, and then people would move towards the best practices. I think it's, for me, the way, wanting to value life and the way it's been juxtaposed between life versus economics, I'd be very, very reluctant to accede to anything. But I think the right thing to do is to kind of push in the direction of opening up the economy. Now, some people express this as dollars versus health, but that's not fair. It's really health versus health, because poverty, GDP is also a health issue. Life expectancy goes down if there's if we have a bad economy, if GDP drops by a lot. I wouldn't open up. I would follow the CDC guidelines, but I think the broad stroke, let's shut everything down, is something that we are pushing against now. And I think the tide is rising in that in general. And I wasn't as critical as some of the states that were kind of leaning into that movement.
I think at the lows in the markets, you also, weren't quite as negative about the prospects for what the future was going to hold. And I don't know if you're quite as surprised as a lot of people that the markets have recovered at this point. And I'm trying to glean your thoughts through some of the tweets you made right at the time.
I think we're in the neighborhood. We're not. It's tough to forecast. I think we're in the realm of contingency planning. Neil Kashkari, former Goldman Sachs alum, Neil Kashkari, said we really don't know the damage that's been done because the unemployment number is understated, because some people aren't looking for jobs, so they're not counted. I'm not sure that that's really what the damage is. We know we shut the economy down. The damage would be businesses that are shut forever, jobs that don't return. And we don't really know that. And we don't really know that from this unemployment number. I'm sure there's some correlation between the number of jobs lost now and the fact that fewer jobs will come back. But we really don't know. That. And I think we just have to, as a manager, I think you have to plan for a number of contingencies here. Generally, at the depths, things are, look, an unresolved crisis is always horrible. Is always bad because your mind extrapolates to new dimensions and they're all bad. I think people, generally, just to, Warren Buffett says this, everything, I mean it. And, Americans are just very resilient and flexible, and people adapt. Believe me, my job didn't allow me to be Pollyannish. But I do think you ignore history if you don't see that we're quite adaptive. That said, there is undoubtedly damage being done, and on a macro GDP level, and also on a personal level. My heart goes out to restaurateurs who built businesses, and some of those businesses won't open again. And
you obviously were right in the trenches in 2008. You understand Fed action. You understand fiscal action. I'm going to read verbatim one of your tweets from April 9th to just set this up. Not all of the bold actions in support of jobs and the economy will go smoothly. And of course, public health will determine outcomes. But Monday morning quarterbacks are going to have a field day. But in Mnuchin and Powell, we have the right folks on our economic issues at this critical time. So you figure the Fed's moves all in, really shock and awe type moves, and also some of the fiscal programs from Mnuchin et al. in Congress These were both. Yeah. You think there's merit in both of those programs?
I think they acted terrifically. Undoubtedly, there's going to be 1,000 PhD dissertations that'll be written from carrels in libraries somewhere when things are calm and everyone can reflect, and they'll find 50 things that they could have done better. But in the fog of war, heat of battle, I think they acted very quickly, courageously, and largely correctly. And as somebody who used to run a big enterprise with a lot of challenges, and a lot of our business was trying to predict the future, trying to position companies based upon uncertainties and where economies and industries were going to go. It's hard to get this stuff right, but somebody has to be bold and make a move, and they made a move. And so if you want to sit there and say, you should have gone a little bit left, 13 degrees to starboard or something like that, easy enough to do. But I'm telling you, I think those guys did very, very well. Not everything has worked perfectly. Who would expect that it would? And, you listen to some of the talking heads, go at it. I think to myself, gosh, I'd like, your knees would be knocking together if you were faced with making those decisions at that moment.
Right. Becky.
Hey, Lloyd, you mentioned just your previous job, what you used to do in terms of thinking through risk. You're one of the best risk assessors ever. What do you think about what you'd be doing right now if you were running that business still or another business? What you'd be doing just in terms of trying to make sure you survive this and make sure that you can handle anything that comes around the corner?
Sure. The first thing you have to do is, you have to make sure, your people are safe. You have to get your house in order. You have to make sure you're up and running. It's like the steward on an airplane, tells you to put your mask on first, then the mask on your kid, because what good does it do if you pass out, then you're both gone. So you have to stabilize yourself. You have to communicate with your people. And I think one of the most important things to do in a business like ours, which is service oriented and actually lives with other people's problems and tries to sort out their issues, because as advisors and as the other side of their transactions, we have to make sure that that we're communicating well with them, with our clients, and help them work through things. And one of the most important things is you don't want all your people staring at the screen, wringing their hands with anxiety. During the financial crisis, one of the things I said, and this applies to any crisis that we would be involved in, the best thing you could do is do your job, serve your clients. 2% of the people in the company need to work on working through our own problems. If 100% of the people are standing there distressed, watching TV, watching the stock price go up and down, you're serving no interest. So I'll tell you this. I will communicate with you regularly, tell you what's going on. The 98% of you just do your jobs, and 2% of us will sort out our own issues. So that's a very important thing. And then get on the phones and engage with people, try to anticipate what's going on. But the best way is, put yourself at the coalface and try to help people through their problems.
One of the things that you're on record saying that has surprised you the most is that despite the trillions of dollars that we're adding to the Fed balance sheet, to our budget deficit, investors, many foreign, still willing to lend the U.S. a virtually limitless supply of dollars at 0.6% for 10 years. That's
Sure.
That's great, and it's frightening, isn't it? Is it good or bad?
I mean, well, first of all, before I tweeted out, I was afraid. I thought it might be unpatriotic to hit send because maybe they didn't notice the fact that we were incurring, trillions and trillions of dollars worth of deficits on top of our trillions and trillions of deficits. And I'm thinking to myself, in 10 years, obviously we can always return dollars because we have a printing press. The question is, what are those dollars going to be worth in 10 years? And so the fact that people will lend our treasury dollars at 60 basis points for 10 years, I think is incredible. And by the way, that's very much owed to the fact that the dollar is a reserve currency. Other countries, by the way, more than half our debt is owned externally by people outside the United States, central banks and other institutions. But the fact that the dollar is a reserve currency, and effectively the only effective reserve currency at this point, and countries have to keep their reserves in dollars so that they can make their payments down the road, which means they have to invest it in instruments. And that is a huge asset towards financing our deficit. And I think we undervalue that. And one of the things that I'm always conscious of, we're not close to a tipping point that people will find a substitute for the dollar. But believe me, everybody in the world is trying. Every sovereign in the world is trying to find a substitute, and none is available. But I wouldn't, in the back of my mind, as running policy, there's not much you can do now because we obviously have to build up. Our deficits are going to grow given the exigencies that pertain now. But in the long run, we just really can't jeopardize that, and we have to act responsibly so people don't look at it and say, "Gee, I'm going to have my, I think I need to have, my reserves in renminbi." Instead of dollars, because they're behaving more responsible and it's a greater store of value in the long run.
Here's where I want to go with you, given the conversation you were having before. I want to talk a little bit about what the other side of the pandemic may look like in terms of business and the reputation of business, because you lived through the bailouts of 2008. You took money from the government. We can debate whether you were forced to or you had to or whatnot. But the bigger issue is how you think the public is going to look at this later. And to some degree, whether you think the goalposts have already moved insofar as when the PPP program, for example, was first announced, the idea was everybody take the money, go get the money. And then, of course, a week later, there was a real shift in terms of actually let's return the money because we're going to get tarred and we're going to get named and shamed.
Look, I think people should be big companies should be very reluctant to take government money. It's a natural thing. I don't have any, it kind of makes sense. In the moment you pass legislation, your focus is on let's get the economy up and running. And if there are inefficiencies, if some goes in the wrong direction, you say, oh my gosh, let's know what we're talking about. I want to get things up and running. We'll tolerate inefficiencies. We'll tolerate some percentage going to the wrong people. Then as things cool off, as things get better, your focus, you no longer have the anxiety of the problem. And then, who had it that shouldn't have had it? Who did we intend not to take it but did take it? And it goes on. And I think over time, the goalposts will shift. It's kind of a natural phenomenon. I don't think it's bad behavior on the part of the government, but it's going to happen that people are going to be, they're going to be winners and losers in this. Well, maybe there'll be losers and bigger losers, and there'll be some resentments that emerge from this because some people will have gotten help and other people's similarly situation won't have, and those resentments will come to the fore. Right now, they're repressed and by the fact that, again, the exigencies of dealing with the crisis are taking precedence. But as things calm down, the focus will shift. So if you need it, take it, but you really should need it.
What do you make of the airline bailouts? And I ask you because you could compare those to the auto bailouts. You could compare them to the bank bailouts. They're clearly intended to keep employees employed. We're already hearing that the day that it ends, which is September 30th, many of the employees who are being kept on are likely to be fired. In fact, they're already making plans to do that. In this case, we have not just saved employment for the period of several months, but we have saved the shareholders of the airlines. We've decided, for better or worse, that they are a special class.
Well, that's one of the inefficiencies of the situation. And we're not doing that because we favor those shareholders. We are doing that because somehow air travel is integral, in some cases, you might say strategic to the health of the overall economy. And that's why we're doing it. And sometimes you have collateral damage and sometimes you have collateral help. And that's what I'm saying before. When the exigency and the anxiety over the collapse of an important industry, again, important not just because it generates revenue, but important to functioning of other industries in the country. When that anxiety dissipates, the full weight of the country is going to turn on the people who were beneficiaries, and that's why the goalpost ultimately will move. And it's a natural phenomenon, but people should be aware of it going in. But then they had very real need, and I think they're doing it because they had no choice. And that's a screening process too.
What do you think about the danger and risk to municipalities, to cities, and to certain states, given the lack of revenue that's going to come in, and what's going to happen long term in terms of taxes, individual taxes, corporate taxes? I mean, how does a city or a state like New York City get back on its feet when this is all over?
Well, it's going to go up. I understand the the schism between the Republicans and the Democrats. The Republicans don't want to bail out cities and states for their prior profligacy and their obligations, and so they don't want to bail them out of pre-existing issues that the states may have had and municipalities may have had. At the same time, states and employees, you can regard them as companies with, performing important services with real employees. And if you want to save the jobs of restaurant workers, you certainly want to save police and fire workers. And so I think what's going to, the obvious compromise here is for the federal government to distribute money to the states and municipalities, but make it very specific and targeted to save those essential municipal job functions. And then somebody will come up with the obvious point that dollars are fungible to the extent they're paying for that. It frees up money for other things. And, we could obsess on this stuff, but just let's remember, we're fighting, to use the metaphor, we're fighting a war here, and you can't worry about your ship or your tanks getting scratched in the process. We have to do what we have to do.
What do you think happens to corporate taxes? It's interesting because here we are at this moment where we've lowered corporate taxes, and yet we've created the greatest insurance policy in the world, effectively, for corporations.
I think we'll have to get more revenue, and one of the rhetorical matters will say, you companies have been helped in some cases by loans, in some cases by subsidies, in some cases by the federal action that allows your debt to be owned in a safer way, and therefore you have lower funding costs. And so there'll be more revenue. The other side of that argument is saying, look, to the extent you raise taxes, it's going to be harder to raise GDP. This is the supply side thing, and the real way of accomplishing of fixing the deficit is to just allow the economy to reflate and resurge faster than otherwise would. Don't forget, the government is a partner in our economic business. So they earn now at this tax rate, they own 21% of somebody's profits. It used to be 35%. Right. But they're partners, and they should want these businesses to be stimulated to grow. That's a schism. But I think it's going to be unavoidable that that additional revenue has to be raised. And I think we should focus. One of the issues from the last crisis, we hadn't finished paying the price of that in terms of deficits and Federal Reserve balance sheet, et cetera. And I think it made us, a little bit more vulnerable in trying to, buy our way out of this one, manage our way out of this one. So right. I think more revenue is in the case.
What do you think the danger is to the banking system? Listening to Warren Buffett over the weekend, he hinted at some worst case scenarios and discussed, the issue, for example, of corporate or commercial real estate or real estate writ large, which is to say that if we do have a real problem in this country, mortgages are not going to get paid, rent is not going to get paid, and that's going to bubble back, as you might imagine, to the banking system. We're likely to see that in the energy sector, where there's a lot of levered businesses that are connected back to the banking system. I know we're in a much stronger position today, but as a risk manager, how do you think about that?
Well, we're in a much stronger look. I have a very vivid imagination, so I can always extrapolate situations where, we get into just a horrible, vicious spiral. But the banks had help in this. Competition might have driven financial institutions to be more aggressive lenders, less capital, more leverage than they otherwise would be. It's speculative now. I was, a lot of us were scarred in the financial crisis, and so really didn't want to get back to that place. But it really wasn't our decision, because a lot of the rules that were passed and the way the financial institutions, key financial institutions, were regulated required huge amounts of capital, and huge amounts of capital subject to stress tests, which had conditions that are like the conditions we're seeing now, in some cases in excess of it. So, look, I can always imagine, worse and worse and worse things, but there's a good reason why there's not a lot of pressure on the bank's own financial position right now, because they're very, very well capitalized. In fact, right now, I would guess that the banks are under a lot of pressure from the official sector to be more aggressive in lending and to help the economy. And it's the bankers who survived the financial crisis that are a little bit reluctant to, take even 3 steps back to that bad place that they've been in a dozen years earlier.